All right, folks, we're back with a recession's a terrible thing to waste. Are you mentally prepared? I'm here talking to Nelish Francis, a credit specialist, and also Stephanie Stevens, real estate investor and one of our success students from REMIC Wealth Institute. Ladies, how's it going?
Wonderful. Great, thank you.
Okay, now this question is for Nelish. Why are people so afraid of credit?
Well, Frank, I wouldn't say that people are afraid of credit. I think that most people have to use credit to service their everyday needs with regards to, finding a place to live. If they need to get a mortgage or an auto loan, they are applying for credit. They're using their credit to be able to get access to these things. So
on a percentage scale, what percent do you think that the average family out there are using credit?
70%. 70% of people are using credit.
70% of people using credit.
Yes.
So that's quite a lot, actually.
It is.
Okay. So when people hear the word credit, they get tight. They're not as open when they hear the word credit.
Right.
And I don't understand that. You're a credit specialist. You deal with them all the time.
Right.
So what's the reason for that?
For the most part, it's because most people don't know about what their credit is, what credit means. They have a negative credit score. They don't know what that means for the most part, but they know that it's affecting their ability to be able to purchase certain items that they would like to have.
Okay. Right. And of course, we know a negative credit score comes from having errors in your credit report.
That's right.
There's a lot of people that have errors in the credit report, as we all know. What percentage is that again?
Yes, Frank, it's a very high, about 80% of Canadians have about 5 errors on their credit report that they do not know about, and those 5 errors are costing them money, a lot of money.
What kind of money are we talking about? Give me an example.
Thousands of dollars in interest is what it's costing them.
So we're looking at having a credit card from 10% versus having a credit card at 25%?
That's correct.
Wow.
That's correct.
Wow. So high credit score or low credit score turns into a lot of errors on your credit report, and in return it's cost you high interest.
That's right.
Now, talk about high interest rate. I want to focus on a specific sector that I know is really overburdened the average household family.
Right.
And it's the family that goes out and purchase a resale car,
right,
where the credit is not so good.
Right.
And what kind of interest rate do you see in that sector?
Interest rates are as high as 31%.
Ow.
Yes.
31%.
Yes.
Now, some of you out there probably in that situation where you actually have your car, normally a resale car, at 29, 19, 20, 30%. That's very, very high. What are some of the things that a person in that situation can do to bring that interest rate down, to better their score, and change their financial situation?
Well, really and truly, what you need to be doing is you need to be coming and speaking with us so that we can put together a program to help to prepare your credit. Having a vehicle at 31% interest rate, and those particular dealerships are selling you on the fact that you can repair your credit through this particular loan. Yes, it is possible to repair your credit, but not if you do not have the information that you need to be able to service the different parts of your credit bureau. Having that one trade line, which would be that car loan that you have, if you make those payments on time on a monthly basis, yes, it's going to help to repair your credit, but there's other things that are on your credit bureau that you must attend to as well.
Right.
And you don't want to be paying that kind of interest at all.
Right. And for some of you out there, if your credit situation is not so great and you're trying to repair your credit or rebuild your credit, it doesn't make any financial sense for you expensing yourself in the $10,000, $15,000, $20,000 car. One simple strategy you can do is go to your local bank or financial institution and get yourself a secure credit card. The one that reports to Equifax or TransUnion on a monthly base or a quarterly base. And that's going to help you repair or start rebuilding credit as soon as possible. Let's talk about, you talked about earlier, Nelish, about the credit system or having not so good credit affecting a person's insurance or employment opportunities. Could you explain that to the folks, please?
Yes, there are certain employment opportunities, such as if you were looking to work in a bank institution, they are going to be checking your credit, and if your credit is not good, you will not be able to be employed with that organization. As well as insurance, you would be denied the opportunity to have insurance in certain industries if your credit is bad, or if you do receive the insurance, you're going to be paying a higher premium.
Now, are you seeing a lot of people are procrastinating?
Yes.
When it comes to repairing the credit?
Yes.
And what do you think is causing that?
It's fear of the unknown. Just thinking that maybe there's nothing that they can do. It's just the way it is, and they're just going to have to just live that way.
So if a person's out there procrastinating right now, what would you tell them?
I would tell them that they need to contact REMIC Wealth Institute, come in, hear what we have to say, and invest in yourself so that you can move forward with the next 8 years of your life instead of keeping your life on hold. You want to be wealthy, take the steps necessary to do so.
There you go, folks. The credit system is forgiving. It's not the end all. Whether it's bankruptcy, consumer's proposal, bad credit, 20 R9s, it doesn't matter. It's a forgiving system. So it doesn't matter how bad the situation is, you can start off building or rebuilding credit or repairing your credit system to get access to the bank's cash and start investing and put your life on a positive track. I'll give you a personal experience with a guy who came through my credit program. He filed for bankruptcy 9 years ago. And he keep applying for credit from different banks and they were declining him.
Right.
So he thought it was personal.
Right.
So he said, Frank, what's really going on? So once we pull his credit report and review it, what happened, folks? He filed for bankruptcy 9 years ago and he had a 0 credit score. Banks don't lend money who don't have to people who don't have any credibility. So we start off repairing and rebuilding his credit within a short time frame. Within 3 to 6 months, you start getting credit cards, start getting access to over $65,000 to $70,000 in the bank's money.
Right.
Okay, so again, it's forgiving. So it doesn't matter about the situations, you can always start the process and continue to get access to more and more of the bank's money. So what's going on, Stephanie? What are you seeing going on out there? What you doing? Did you have an extreme bad credit situation that you actually repaired yourself?
Oh, yes. A few years ago, I did have some credit issues, and well, too bad I didn't know about the REMIC strategies then, but just an average consumer, I just bit the bullet and took my time and paid off my credit owing. And after that, I sort of just left credit alone. And I even lost a credit card. You know, so to me, it was like, you know what, I don't need the credit system. That's it for me. It was a bad experience. I'm just going to stay away from it. So within a few years, things changed and, you know, I wanted to get a car. So I needed a car loan. Mm-hmm. And I was a bit nervous. I thought I'd probably be declined because of my past. And it was approved successfully. And then a few years after that, I wanted to buy my own home. And I went out and did it, and I was approved again. So yes, credit system is very, very forgiving. So and here I am now as a real estate investor, still with access to the bank's money, right. And it just keeps going and growing, and it grows more and more.
Better.
Yes, yes.
Excellent. So again, there's a lot of options out there. Now you talk about paying off your debt that you owe. Did you negotiate it?
I did not.
You did not?
I did not. I did try to, I mean, the representative I spoke with did say, okay, Stephanie, since, you know, you're making a genuine attempt to pay this down, we'll settle for X amount. But I know I could have negotiated more had I known the REMIC strategies. Right. So, but now I know, and I can help others as well to, you know, help them and educate them.
Absolutely.
Yeah.
So if you have a bad credit situation out there, whether it's low credit score or R9s or bankruptcy or consumer proposal, the creditors are calling you, they're bugging you, I advise you don't pay them a single dime until you attend our workshop and attend our courses. We're going to teach you exactly how to negotiate with credit collectors, how to put more cash in your pocket. Most time, folks, you don't have to pay them 100% of what you truly owe them. Now, I'm not saying don't pay the creditors. All I'm saying, I'm going to teach you how to leverage it to pay them a little bit less and put more cash in your pocket. We'll be back with a recession, a terrible thing to waste. Are you mentally prepared to handle yourself in this recessionary times? Credit-wise, investment-wise, financial-wise, mentally wise. Get on board. See you soon.